welcome back to my blog. It's the Mortgage Doctor. Hey, today we're going to cover a great topic submitted by one of my viewers, Dave. Appreciate the question. Dave had a question about why is it so difficult for self-employed individuals to get a mortgage loan? Well, there's several reasons, but number one, mortgage lending standards are tougher. Number two, there's a fine line between what you, the business owner, self-employed individual, reports to the IRS for taxation purposes, and what you, the individual self-employed person, reports for income that the mortgage lender can help qualify you for a loan. So you got to walk that fine line. You take in X amount of revenue self-employed, you have a lot of expenses, and that reduces your income, which is what the IRS calculates your taxes on. Well, the only couple things that we can add back in a mortgage lender are depletion, depreciation, and some one-time expenses. Maybe a liquor license to set up a restaurant. You know, every situation is different, so there's no magical answer. Number two, when you open a new business, you may not make money the first year. So if you don't make money the first year, and the mortgage lenders require a 24-month average to calculate your income. Just like in a regular employed individual, you have to have 2 years history. Well, if you're self-employed, you have to have 2 years tax returns. But if you lose money in year one of your business, now you need years 2 and 3 to bring that income back up to the standard income levels that are required. Number three is year-over-year income increase or income decrease. If you have if your second year is more profitable than your first year, that's a positive. The lender's going to give you credit for that. But if the lender sees your second year, your income went down, they're going to take a conservative approach, and they're going to put more weight on that second year decline in income. So you have to be really careful with that. The biggest thing that I encourage people that are considering self-employed is talk to a mortgage person like myself, get professional advice, talk to your accountant on how this is going to play out. If you can potentially buy a house, get some of this stuff dealt with prior to going self-employed, then I would encourage you to do that. Maybe planning doesn't allow for that, but you really need to think about it. And last but not least, look at expenses that you pay personal versus business. If they're paid through the business, then they may not be counted. If the business signed for them, they may not be on your personal credit report. Again, lots of information. Self-employed is definitely a unique and tougher world. Call the Mortgage Doctor if you're looking for advice. And again, always seek out the advice of a professional accountant, tax attorney when you're considering making a major move like going self-employed. Again, see you on the other side.